Okay, great. Hi, everyone. Welcome to the Tax Master for September webinar's first day. The main agenda of this session is so that we can enhance our preparation and also resolve any of the doubts that you guys have. Along with that, we'll also be solving the Section C question of our pre-September mock as well. Okay, are you guys ready for the session? Can I get a thumbs up or a yes? Okay. Now, as you already know, I am Suhas Mohan, your tax mentor at BeingACCA. And at any point of time, you have any queries relating to the questions that you're practicing, or you're unable to understand any concept and you want to get those doubts clarified, you can always reach out to me. This is my personal mobile number. You can ping me on WhatsApp, and I'll ensure that I'll be responding back to all of you guys within one day so that all your doubts are being resolved in a timely manner and your preparation is going on in up to the mark and you're at a very good space with your preparation. That is all we aim for at Being ACCA, to ensure that you guys are exam ready. So please note down my number. I'll also ping this in the chat window so that it's accessible for everyone. You guys can take my number and feel free to ping me whenever you have any doubts. All right. So a bit about me is that I am an ACCA member and I've secured World Rank 1 in Tax UK exam by scoring 98%. And I'm currently working as an EY at EY as an assurance assistant manager. So I work in the audit department. So if you guys are looking for any opportunities and if you're planning to start with your PR requirements and have any queries relating to those, I'll be happy to help you all out. Okay. So with the introductions being done, let's try to understand about our tax exam first, and then let's move on to understand the conceptual part of it. So tax is a paper, as everyone has already completed almost like one half of their preparation right now, because you're coming to the last 15 days before our examinations begin. So I would like to say something. Tax is a paper which is very straightforward if you remember all the tax rules. Remembering tax rules plays a very, very vital role. Though the subject looks very lengthy because of the tax rules that are there to remember, but once you remember them, it will not stop you from writing your examination, because you will have almost 60% wherein you'll have to solve questions or apply the tax rules that you have already studied. There is nothing that will come out of the scope, or you might not understand on how to frame your answers, because everything is rule based. It is similar to the law exam that you guys had. It is very much similar to that. But the only thing over here is it is very numerical based. So because of that, as we can see, the pass rates for tax exam have always been above 50%. And in the recent quarters, we have seen it going up to almost 55% as well. So tend to focus majorly on understanding the concepts and remembering the tax rules. Because once you're able to remember the tax rules and solve as many questions as possible, there is nothing that can stop you from clearing your examination. All right. Because the tax rules are very lengthy, what I would always suggest is take a cumulative approach of preparation. I am sure you guys have finished at least your first revision. Yes. Can I understand if you guys have all finished your first revision? Yes, no, maybe. Have you got completed your revision of the topics at least once? A thumbs up or a yes, guys? Okay, Mitushi says yes. What about Yuti also says yes. The others? Yuti says yes. Prince also says. Okay, that is great. So because you've completed your one portion of one round of revision already, what I would suggest for you to do in the next 15 to 20 days is that you take up cumulative preparation, like take up every day 4 to 5 topics. Try to revise on the tax rules again and again so that you are able to remember them. Remembering the tax rules plays a very, very vital role in your preparation. And I would always encourage you, along with solving questions. If you solve the questions, you'll remember the tax rules for sure. But it is also, but there might be some tax rules that are not tested regularly in your question banks. So it is important that you revise on the rules, because you don't know what rule is being tested in your examination. So do not worry, don't get scared. Anytime you have any queries or you're not understanding a question, you can feel free to reach out to me and I'll be happy to help. Okay. So we at Being ACCA have been teaching tax for the last 1.5 year, and our results have been exceptional. We have mentored almost 80 to 95, 80 to 90 students, and the results have been exceptional. We can also see the highest score that we have received in tax is 79%, and the students have been very happy with our results. So you do not have to worry about how you'll be mentored. We will be providing you with the structured guidance and the support that is necessary for you until your last day, just the day before your exam, or even on the day of your examination. Okay, anytime you have any queries, you can always reach out to me. Now, I know that all of you have completed your tax preparation revision once, so all of you might already be aware about what our course structure is in tax. We majorly have 6 topics, while the first being tax UK and administration, which is completely in a theoretical concept where you will not have any numericals that come out of it. So we consider this a minor area. And also, after that, we have our income tax and NIC liabilities, which will be tested in your section A. And in section C, you'll definitely have one question that is coming for 15 marks. So it is very important that income tax almost covers up to 40% of your entire preparation. So if you're thorough with income tax, you will be able to complete other topics in a fairly comparatively easier manner. Income tax and NIC liabilities is one of a very concept heavy subject because you have got different types of incomes and the rules are different from each of them. Like property income, you have different rules, pensions, different rules, employment income, different rules, income from self-employment, different rules, capital allowances, all of those are very rule heavy. And it is important that you remember all those rules. So if you are able to master income tax and NIC liabilities, remembering the rules of other areas becomes easier. And as I would always say, the self-employment from income tax and corporation tax are somewhat related. So if you are able to master that, and then once you come to corporation tax and you try to compare and contrast between those concepts, remembering the rules of corporation tax also becomes fairly easier. Then we have chargeable gains, inheritance tax, and value added tax. These are the three areas which will be tested as a part of your section A and section B. In section B, you'll definitely get one question from chargeable gains, one question from inheritance tax, and one from value added tax, each for 10 marks. So you'll be, if you are not thorough with that concept, there is a short miss of 10 marks in your section B, and as well as a few questions of at least 3 to 4 questions in your section A as well. So for that reason, do not neglect any of these areas. Many students tend to focus on the 40 marks in section C and tend to focus only on income tax and NIC liabilities and corporations, but tend to miss out on these other areas. Especially, I've seen a lot of students ignoring inheritance tax and VAT. Please do not do that. Ensure you're completing your entire syllabus and covering each and every topic, because if you miss out on one topic, there's a sure shot miss of at least 10 marks in your examination, which might hamper with your passing mark that you have to get. So for that reason, ensure that you do not miss out on any of these areas. We call tax UK and administration and value added tax to be minor areas only because of the quantity of rules, but not about the number of questions that will be tested. These are minor only because of the rules that exist are not very vast in comparison to the other areas. So that is the only reason why we call it a minor area and nothing other than that. You should not miss out on any topics. Please keep it in mind and ensure that you're solving each and every topic and each and every question so that you will be able to clear your examination with flying colors. And in any of these areas, if you're having any queries, you can always reach out to me and I'll be very happy to help all of you guys. So let me take a pause over here and ask you guys, what is that one area that you feel is a bit confusing or that takes up a lot of time in your preparation? Can you guys tell me? Probably can you ping in the chat so that I can understand, get the responses of everyone? What is one area that you feel is very confusing or that you feel gets to your nerves in your preparation because the rules are very much complicated to remember? Okay, capital allowances, Nutrition says corporation tax, inheritance tax, UT says the self-assessment areas, and Vidhi says lawsuits. Okay, so here I get there are multiple different answers from everyone, but majorly I am very sure. Can you guys also confirm if the complication that you're facing is only in remembering the rules or understanding the rules? Guys? Okay, Yuti says remembering them. So, Yuti, when you're facing an issue with remembering the rules, always try to understand that doing this cumulative preparation will actually help you in remembering all of those rules. Because when you look at the self assessment is completely theoretical in nature. You can't do anything but actually remember those rules. Because only if you remember them, you will be able to solve the questions. Self assessment will come for almost 8 to 10 marks in your question in your exam, or high. The least that I've seen is come for 6 marks in the examination. So it is very important that you tend to remember those. Okay. And then capital allowances is understanding the part of capital allowances. You will only be able to do that once you start solving questions, Prince. Tend to solve as many questions as possible, especially of your self employment and corporation tax, and try to compare the differences between the capital allowances that are applicable for individuals and for corporation tax. Then you will be at a good place. For individuals and corporation, for example, you do not have private use asset pool for corporation tax. Yes, no, maybe. Yes. So for that reason, if you're able to compare and contrast, then it is not one topic you're mastering, but you're able to master both income tax and corporation tax. Yes, absolutely right. It is the enhanced capital allowances that are available. So try to understand all of these differences. Try to compare what is there in corporation tax and what is not there in income tax. When you do this compare and contrast, you will be able to understand it better. And once you understand it, try to solve as many questions as possible. As I've already been mentioning, you can always reach out to me and I'll be happy to help you with your all your doubts and queries that you've got. Okay? Now, our exam format. I am pretty sure all of you are already aware of this because we are coming to the end of our preparation. Our exam consists of how many sections? Three? Yes, no, maybe? Three questions. We have three sections. So our first section will be for, we'll have 15 questions, each carrying 2 marks, so a total of 30 marks. And this section is usually very tricky because it can test you from the entire length and breadth of the concepts of tax. So it is there's no nothing like, even in section B and section C, we know what are the areas that will be tested. But in section A, we do not have that. So this is where majority of the students tend to lose their marks because they are either not focusing on some important areas like self-assessment, for example, or they tend to miss out on few of the sections that will be tested in section B. And because of that, they lose marks in section B as well as section A. So do not tend to do that mistake. Try to be thorough with all your syllabus. And then once you're thorough with it, try to solve as many questions as possible. You've completed Kaplan, go solve your BPP. If you finish that, go to your practice hub. Solving as many questions as possible is the only method of how you can clear your ACCA tax examination. Because once you start solving many questions, you'll find the repetitive nature of the rules that are there. So that will actually help you in understanding the rules that you've studied so far. Okay. So try and ensure that you're not missing out of any of the concepts. Because in section B, which is your objective test case, we'll have three case studies. One case study will be from value added tax, one from inheritance tax, and other from chargeable gains. Chargeable gains can be tested either for companies or individuals as well. So it is very important that you tend to remember the concepts better. Mostly chargeable gains will come for individuals only. Usually that is the pattern, but we have seen some cases where the chargeable gains for companies has also been tested as a part of your section B. So it is again important that you tend to ensure you're thorough with all the concepts. Okay. So for section B, you'll get it from inheritance tax, chargeable gains, and value added tax. One case study from each of these, each case study carrying 10 marks. That is 5 questions with 2 marks per question. So tend to ensure that you're not missing out on any of these concepts because In section A and B, unlike section C, you will not be getting any marks for the correct steps. It is either full marks or wrong, or you'll get 0 marks. So for that reason, try to be thorough with the concepts and also be very careful. If you've calculated a figure and you're not sure if your calculation is right, if you're having a doubt on that, tend to recalculate it again so that you're able to agree to the amount that I've already mentioned, or try to flag it so that once you've finished your entire exam, you can come back and recheck your answers. Because section A and section B, again, I am trying to mention this again and again, because if there are choosing multiple options or choose all that apply, choosing two right options, but you're not choosing the third option, then you will lose your marks. Okay. Try to be very careful with these questions. Try to ensure that you read the question properly and then start solving the question. Clear? Yes, no, maybe. Can I get a thumbs up, guys? Clear with section A and B? All right, great. Now, let's come to section C. Section C has three questions and they're very much predictable. You'll get your first question from tax planning where they say, is it either better to have a company registered or should the individual continue as a self-employed income? So you try to compare and contrast about what tax rules are to be applied and which is a better one. And then about sometimes about chargeable gains also might be tested here about if the gains are to be if the disposal is to be carried forward to the next year or if the asset is to be disposed in the current year. You might get questions like that for 10 marks. Tax planning is something you will be able to solve only when you're able to compare and contrast between income tax and corporation tax. If you're able to understand what are the differences between both of them, that is what actually helps you in solving your tax planning questions. Once you do that, your question two and question three are always these. They will always be fixed. But two 15 markers, one from income tax and one from corporation tax. Tend to solve as many questions as possible from income tax and corporation tax section C questions. Have any doubts? If you're not understanding how a calculation is done, you can reach out to me and I'll always be able to help you out with that. But your section C, the pattern is very much fixed. This will not change. Sometimes in tax planning, very rare cases, very rarely they've asked about CGT, but other than that, no other topic has been tested as a part of your tax planning. Clear? Any doubts until here? Any doubts, guys? Okay. Now let's go to the important aspect about why students tend to fail in their tax examinations. Tax exam, again, as I mentioned in the initial stages, it is comparatively easier in related relation to the other subjects, like double A and all of those, where you'll be getting marks about how much you write and what are the concepts that you have written about assurance. So that is very theoretical in nature. But tax is pretty straightforward. If you know the rule, apply it correctly, you will get full marks. There are students who have actually secured 100% as well in their tax exam only because if your answers are accurate, you will not be losing your marks. Clear? But why do students tend to fail? The major reasons are lack of exam practice. This is something that is of utmost importance. Try to solve as many questions as possible to understand how to calculate the figures or how to write your answers. But once you're done with that, just at least 1 week or 10 days before exam, at least try to give 2 to 3 full mocks so that you understand time management, how you are able to apply different concepts during your preparation. Is it if you're preparing income tax and you're writing income tax questions, you tend to answer those questions better. But once you write a full-fledged mock, it helps in giving you a recall value to understand, okay, I've studied corporation tax earlier just before the preparation exam. But now when I'm writing it, I have to answer questions of chargeable gains, inheritance tax, VAT, and income tax. Am I able to recall the rules of it better or not? It helps you in giving that clarity. It also helps in identifying what are the areas of topics, like are you losing your marks in chargeable gains, inheritance tax, VAT, income tax, or corporation tax, is also something that you can assess only if you write a full-fledged mock. So for that reason, I would always encourage, try to write at least 2 to 3 mocks to get to that clarity and understanding about your time management, the areas that you're lagging behind in, and evaluate your recall value of the rules. Next is not focusing enough on your theory. Always self-assessment and the theoretical aspects that are there will be tested for at least 40% in your examination. So it is very important that you focus on the theoretical aspect, self-assessment. You should know when the filing date is, when the filing dates are, what are the penalties that are applicable. All of those will be heavily tested in your examination. And it is very important that you remember these rules. Okay, Prince, I've just seen the. I probably once I finish this slide, I'll move to the section C again. Okay. Next is ignoring minor areas. This is again the theoretical aspect that major students miss out on, like value added tax. Many students, because that is the last topic that they'll be preparing, and they get exhausted. I understand they get exhausted because of remembering a lot of rules already, and they tend to ignore value added tax or the self assessment portions. Please do not do that, because both of those put together itself at least will be coming for 16 to 17 marks in your examination. So very important that you actually remember all the rules and complete your entire syllabus. Do not leave out on any topic. All of these will definitely be tested. Next is not being able to remember the rules. Not being able to remember the rules is a very common mistake that I've seen with the students who are underprepared. It is not the issue with the students who are actually prepared or completed the syllabus, but with the students who are underprepared. That is, they have not completed their syllabus until the last week of their examination. Please do not do that. Ensure you're completing syllabus beforehand and try to revise on the tax rules on everyday basis. Try to revise, revise, and revise. Only if you keep revising is when you'll be able to remember the tax rules. Otherwise, it gets a bit difficult. To not make that mistake ever again. Try to do the remembering, revision of all the rules. At least every day, take up 7 to 8 topics, revise on them, because revision will not take up as much as time that it has taken for you during your initial preparation. Yes, no, maybe. Yes. Does revision take up a lot more time than your initial preparation? Okay, I'm not getting answers, so I'm assuming no. Yes, absolutely. So for that reason, try to take up more amount of topics to revise during the last days so that you're able to ensure that all the rules are remembered. And then comes your calculation errors. Calculation errors are nothing but simple errors wherein when there's a disallowed expenditure that has already been included in your profits, should you add it back or should you consider it as zero? Disallowed expense that is considered as a part of your profits. Should you add it back or consider it as zero? Yuti says add back. What about the others? Guys, please respond. When there is a disallowed expenditure, should it be added back or should it be taken as zero? Add back. Absolutely right. So everyone is saying add back, correct? So everyone knows that we'll have to add it back. But sometimes in the exam, what you tend to do is, though you know you'll have to add it back, you put a minus symbol before that. And because of that, you tend to lose your marks. Those, you know the concept, you know how to apply it. But because of small symbol mistakes, you tend to lose your marks. So in order to avoid that, whenever there are calculations involved, try to recheck those calculations to ensure you're taking them in a correct manner and not missing it out. And the last and the utmost important thing is not utilizing your tax tables. In your tax exam, one major advantage that you have got is You get to use majority of the tax rules. You do not have to remember them. They are already provided to you in the examination. Like, let me just show you here. Tax tables, you actually know what the rates are, normal rates are, what is a dividend tax rate, how much is your personal allowance, when will a person be considered as a resident or not resident based on sufficient ties. All of these are actually given to you. So you should need not have to remember how much are the percentages and all of those because they will be given to you. Try whenever you're solving questions, try to use these tax tables so that you do not have to remember these rules and you will not make a mistake of remembering the wrong rates. Let's assume sometimes when there is dividend income, major mistakes that I've seen so far are there is dividend income and students tend to take the normal rates because of which, though they know the concept, they because of the wrong rate applied, they tend to calculate it in a wrong manner. So for that reason, it would be best avoided only and only if you are able to look at the dividend rates or the tax rates that are mentioned over here so that it becomes easier. Okay, try to use these even in your preparation. Tend to use these tables more better so that it becomes a practice for you by the time you are writing your examination. Clear on this? Any doubts so far? Okay, let me pause for a moment and ask you, are you guys having any doubts so far? Okay, that is great. So now let's try to understand about our schedule starting from 15th August 2026. That is from today. We have two webinars planned, that is one for today and one for tomorrow. But before that, I think this has asked me about your section C. So in section C, there will be majorly three questions. One will be from, yes. One will be the first question will be a tax planning question, which will come for 10 marks, where they tend to ask us about the comparison, which is better if an individual should register his company or by incorporating it, so corporation tax is applicable, or is it better to continue under income from self-employment, which is a better one based on class 1 NICs or class 4 NICs that are applicable, and then also tend to understand. Sometimes they might also be asking about if an asset is to be disposed in the current year or it should be carried forward and what will be the benefits of it. So usually it is about when would an individual be paying lower amount of tax in comparison to the prior years is how the questions will be framed in your tax planning. While your question 2 and question 3 are always standard. One will come from your income tax for 15 marks, and third question will be about corporation tax for other 15 marks. This is how it will be always. They'll either ask you to calculate your total taxable income or tax liabilities. This is how the questions will be there for 13 marks, and the other 2 marks sometimes would be theoretical questions asking either about when should the filing be done or if there's any, how much are the payment on accounts that are to be made. And all of those are some things that will be tested as a part of your question 2 and question 3. Clear until here? Any doubts so far? Yes, no, maybe? Prince, is this clear now? All right. Do anyone else have any other questions, guys? Any doubts on any other concepts that whatever you have discussed? Okay, great. Now let's try to understand what our schedule would be on the first two or the 2 days of our webinars that we are planning to have. And the first day, that is today, we will be discussing having a revision about our income tax and NIC liabilities revision, and we will be doing the pre-September mock is what we will be focusing on, because the past papers will have different financial acts. So I thought it would be better if we do our pre-September paper, and after that we'll try to discuss how the format of your answers should be and what are the common mistakes that the students tend to make. And in tomorrow's session, we will be revising corporate tax along with the third question, which is another corporation tax question from our pre-September mock itself. Again, after that, we'll be discussing how the format of the question should be answered so that you score maximum marks and what are the mistakes that are generally made. Okay. So now, are you guys ready to revise on the concepts of income tax liability? Shall we do a quick round of revision about what all are the topics that are there in income tax so that you are thoroughly understanding all the concepts? Yes, no, maybe? Okay. So in income tax, there are the most important thing that you should remember when it comes to income tax is we have these five areas that are of utmost importance. Also, there's a partnership here. Yes, the recorded video will be uploaded on YouTube. Don't worry about it. Okay. And we'll also be sharing the recorded videos link on the WhatsApp groups. Yes. So can you guys tell me what do you understand by the term income tax? Can anyone unmute yourself and tell me what do you understand by the term income tax?
Tax levied on individuals for the income they earn.
Absolutely right. The tax that is levied or tax that is collected by the tax authorities on the individual's income that they earn. But here, since you're studying about UK, so what is the organization what is the apex body for tax collection in the UK?
HMRC.
HMRC. Absolutely right. So because we are talking about UK, we should remember that HMRC is the tax authority. And who will be the individuals who are levied income tax? Only the residents of UK? Yes, no, maybe? Absolutely. So because you know that it is a UK resident, how do you determine if an individual is a UK resident? Can anyone unmute yourselves and tell me? How do you determine if an individual is a
There are
UK
three
resident?
steps.
Yes, there are three steps.
Yeah, for
Probably
the
each one
first,
can go for the one each. You think you can start with the first test? What is the first test?
in the first step, there are three things to see, and if any individual passes one of the three cases given, so then that person is automatically non-resident of UK. And the
That is your
first
non-UK
one is
residency test.
maximum
Absolutely
16 days in the UK,
correct.
and then it is 40
Less
maximum 45 days, but not being UK resident for past 3 years.
correct.
And then it is 90 days, maximum 90 days, and the person has to be working overseas,
Full time overseas.
full time
Yes,
overseas. Yeah.
absolutely. So if a person is satisfying any of these rules, then the individual will be considered as a non-UK resident. Guys, can you just give me a second? I'll just come back. There's someone at the door. I'm so sorry, guys. Yes, absolutely right, Yuti, about the non-UK residents. Can anyone go ahead and tell about the next rules that are there about automatic UK residency? So based on UTs, we know if a person is satisfying any of those three conditions, then that individual will not be considered as a resident of the UK. Can anyone else tell me what are the UK residency ties, or how to consider an individual to be a resident of the UK? using the automatic UK residency tests? Anyone? Anyone? Sushila, you, Prince and Vidhi? Okay, probably why not you two? You only can you go ahead and explain the automatic UK residency tests?
Sure, sir. So for the second step, it is that the person is automatically UK resident, and the first one is the person has to be in the UK for more than 182 days.
183 days or more, yes.
I'm tracking, but I'm not sure is it 183 days or 182, but it is 182 days, I assume. And the next one is the only house of the individual has to be in the UK. And the third one
Absolutely.
is that the person has to be working full time in the UK.
Correct. Absolutely right. So if the
And
person is
there's
satisfying any of these three conditions, then the person will automatically be treated as a resident. So
resident.
it is
Yeah.
either more than 182 days or you can say 183 days or more. Okay. Because more than 182 gives it 183 only. So you can
Yeah.
tell it as 183 days or more. All right.
Yes.
Now we considered automatic UK residency and non-UK residency tests. But you're still not able to identify if the individual is a resident of the UK or not. Then what are the third type of tests that we determine?
There are five sufficient ties. And the
Correct.
first one is that there has to be a connected family member in the UK.
Absolutely.
There has to be a second house in the UK which is being used in the tax year.
1 second. Wait. That is not a second house. You are having some sort of accommodation. It need not have to be your second house in the UK. You should have some sort of accommodation in the UK, is what it says.
Yeah. Yeah.
Okay.
Yeah, right. I'm so sorry. Second accommodation has to be there in the UK and the person has to use it. That is very important, I would say.
Yes, absolutely right. You should have some sort of accommodation which you are able to utilize, is what the rule
Yeah.
clearly mentions.
And the third
Uh,
one is that the person is doing substantive work in the UK for more than 40 days, like maximum 40 days. And then the person has to be in the UK for either of the current tax year or the past tax year for 90 days
90
in
days.
either of the 2 years. And the
Absolutely right.
fifth one is only eligible for if the person has been UK resident for the past years. This tie is not eligible if the person is non UK resident. And this tie is that um oh my god, wait. Just a second. I don't know if I'm forgetting it.
No worries,
Um
no worries. Anyone
yeah.
wants to add on to that point?
Oh yeah, the person has to spend the more days in the like most of the days in the UK.
Absolutely. Spending most days in the UK than
Yeah.
any other country. So sufficient ties, these are the sufficient ties. But do you think you'll actually have to remember how many ties are to be satisfied based on the days an individual is, living in the country? You need not have to remember it because it will be given to you in the tax tables. Do not waste your time by remembering about a person will be considered a resident or not based on the number of days. Just remember the sufficient ties. Then, based on if they're satisfying the ties or not, you can take a look at the tax tables and determine if the individual will be considered as a resident or not a resident. Clear? Yes, no, maybe? Yes, Siri, tell me. I think I couldn't hear you when you were trying to tell something. I can see that you've unmuted yourself, but I couldn't hear you. Are you trying to say something?
So are you asking me? No, I was not.
With you,
Okay,
not
okay.
you. with.
नो सर बाय मिस्टेकली हो गया था.
That's okay. Okay. So clear about all the residency rules about how you determine an individual to be the resident of the UK or not? Yes, no, maybe. Can I get a thumbs up if you're clear with those concepts? So the others are not clear with the concepts. Sushila, Prince, Mitoshi, are you guys clear or no? Okay, great. So now we have understood how an individual will be determined as a resident or not for income tax. But what are the different types of incomes on which an individual will be chargeable for income tax is something that we should know. And for that, the incomes are primarily classified into three major types, which is our non-savings income, savings income, and dividend income. Yes, no, maybe? So here, savings income and dividend income are pretty straightforward. You do not have different types of savings income or dividend income. But all you have to do is understand that whenever you are computing these, you should first be computing your non-savings income, which has different types of income like trading income, employment income, property income, and pension income. These are the major types of income streams that you see for an individual, and these are the areas that are very rule heavy. Do you guys agree with me? All of these incomes have and all of these have different rules, and all of them are very rules heavy. You will have to remember a lot of rules in order to ensure that you are able to calculate your non-savings income correctly. Yes. So for that reason, let's try to understand, get an overview on each of these incomes to ensure that you're getting your preparation correct and ensuring you're doing your calculations and all of them right. So the first is your property income. What is meant by property income? Anyone? What is meant by property income?
Income generated from rental, that's called property income.
Absolutely right. Incomes that are generated from rentals or renting out the properties is known as your property income. So, for individuals, what is the default basis that we should be using? Is it cash basis or accrual basis?
It's
The
accrual
income is
basis.
Okay, Prince. First, then I'll go to you. Yes, Prince, tell me.
By default, we can use accrual basis for property income, right?
Always remember income tax default basis will be cash basis only. Okay? It will always be cash basis. Okay, accrual basis is to be utilized only when clearly mentioned in the question. If nothing is mentioned, always use your cash basis. That is your rent received during the tax year minus the expenses relating to the property paid out. Cash expenses paid out, not the rent receivable or payable amounts. Clear with this? Yes, no, maybe? Any doubts on this one so far, guys? Okay. So, again, what is the another important concept that we should be remembering over here? It is nothing but we should ensure that we are only doing or calculating the income tax of an individual for one tax year. Yes, no, maybe? Shouldn't you calculate it for one tax year? Or do you calculate income tax of an individual for an overall lifetime? Anyone? Income tax should be calculated for tax years. Yes, no, maybe? It is taxable income of the individual for the tax year. When does the tax year start? And what is the tax year of UK? Anyone? Absolutely right. Because you're doing the FY25, so our tax year would be 6th April 2025. April 2025 to 5th April 2026. So this is what you should be considering even in your property income, employment income, or in any of these incomes. You should only be taking the income that is receivable or income that is attributable to this period and only this period. Very important to remember this point. Okay. So when you're taking property income, there are multiple types of rules involved, but majorly it is simpler. But few rules that are complicated are about the premium received. How do you tax premium received? For the landlord, for the landlord, and for the individual paying the premium. Individual paying the premium. Can anyone go ahead and tell me the rules?
Sir, is it short lease property
Yeah, the
premium
short lease
or
property, yes. Premium on the lease property, yes.
okay, so total premium multiplied by 51 minus n, which is the amount of years divided by 50.
Okay, so 51 minus n. Or the other rule can also be about. So for the landlord, it will be premium, which is X amount. Let's say 50,000 here. And it will be, let's say 20, 11 years, probably. Okay. Yes. Or do you want to suggest any other years for this one? So for the landlord, what do we do? Less amount should be is equal to 50,000 into the other rule that we can apply is also usually n minus 1 sometimes might get complicating. So you can simply do into 2% into 10. Yes, no, maybe. Is this also an applicable rule? I think Vidya has mentioned this one, n minus 1 into 2% of the premium. So for the landlord, the taxable amount will now be cent plus 10,000. Is this clear? Yes, no, maybe. Okay. Clear with the landlord. But now tell me for the individual who's actually paying the premium, how much would the amount be?
So if the income is already taxed on the landlord, then we divide it by the years the lease has been given.
Absolutely right. Absolutely right. So for the individual who's paying the amount, because he's paying it for the 11 years of 11 years that he's taking the value for, it should be taken as 40,000 by 11, which will be 3636. That will be taxed on the taxpayer or the individual who is actually paying the premium. Is everyone clear with this? Majority of the students actually do not read the question and they do not take this division of 11 years or the 11 years of the lease and they simply calculate this amount. Please do not make that mistake. Very, very important that you remember this portion of it. Anyone is having any doubts, try to read the question thoroughly. Try to understand if we are asking about the landlord's income tax or are we asking about the individual who is taking a lease out and paying the premium. Try to read the question clearly and then answer it. Any doubts on this one so far? Yes, no, maybe? Anyone has any doubts? Okay, great. I'm assuming no one has any other doubts. So in property income, what is another thing that is a bit trickier? It is your renter room relief. Yes, no, maybe. Renter room relief, the questions are usually asking about whichever is beneficial. Usually, this is how the questions will be framed. And whichever is beneficial, what are the two options that you have? Either considered rent received minus expenses paid, or will be giving your property income, the income, or the other option that you have got is rent received minus 7,500 will be your property income. So out of both these options, option one and option two, Whichever is the lower option, you will choose that. Unlike your financial reporting, here your focus should be on reducing your total taxable income because that will reduce your tax liability. In financial reporting, what is our ultimate goal? Maximizing profits? Yes, no, maybe. But over here, what should our goal be? Minimizing the taxable income. Clear? By using methods of tax avoidance and not tax evasion. Clear until here? Any doubts so far? All right, great. So, property income, these are the only two complications. And the other thing is obviously about the finance cost relating to the property. What should you do with the finance cost relating to property? Should it be a deductible expense?
If it's residential property, then it's not deductible. The 20% of the finance cost is deductible for the income tax liability. But if it's
Abs-
non-residential property, then it's fully deductible.
Absolutely right. Residential property, it is a tax reducer. Yes, no, maybe. So always, how much ever is your finance cost relating to residential property, it should be eliminated from your tax liability and not considered as a part of your property income calculation. Clear on this one? Any doubts so far? But non-residential property, you take it normally. Taken normally as an expense. Clear on this? Any doubts so far? Yes, no, maybe? Okay. So property income, these are the most complicated and major mistakes that the students tend to make in. Next, we will move on to, once you're done with property income, next we'll try to understand employment income. Employment income, the only thing that you'll have to remember is employment income should also be taken not on the basis of annual income, but you should be taking it based on, should take it based on the income received during the tax year. During the tax year. If an individual is having two different types of income, if two different employments, one he has worked for 6 months and the other he has worked for 5 months, then should we take it as 6 by 12 plus 5 by 12? Or should we take both the annual salaries and add them together? Okay, let's assume A person has worked with BC Co and DC Co. Okay. With this one, he has worked from 1st April to 30th May. And this one he has worked from 1st August till the end, till retirement. So during the current tax year, how much should we take BC Co salary? It is, let's say it is 25,000 per annum. And this is 35,000 per annum. What will be the employment income of A? Of A? Can anyone tell me?
For 25,000 by 12.
Absolutely. It should be 25,000 into 2 by 12. And this one?
10 by
Sorry?
10 by 12.
Is it 10 by 12? He's actually starting his employment from 1st August. So we should take it only from 1st August to 31st March. Yes, or 5th April, which is a tax year. But we can, for ease of purposes, we'll take 31st March itself. So how many ones should we take here? So 8 months, yes, no, maybe. So here we should only be taking for 35,000 into 8 by 12. Always tend to remember this point. You should only take it for that particular tax year. Though he might be working for the rest of his life, we will not be taking the annual salary, but will only be taking it until the end of the tax year. So this is how you'll calculate your employment income. But after that, major mistakes that the students tend to do is when it comes to employment benefits. Always remember, employment benefits are the major issues that students tend to make in. So for that, the simple rule that I always tend to give it to them is first, remember all the exempt benefits. Once you remember all the exempt benefits, you know the next step should be to understand the basic rules of taxable benefits. Once you're aware of all the rules of taxable benefits, then apply the taxable benefit rules for exceptional cases like motor vehicles, like, sorry, let me change it to cars, vans, house provided, that is your accommodation provided, etc. Accommodation provided, etc. Clear? Always the best way to master your employment benefits, try to remember all the exempt benefits, because exempt benefits, you can straight up know that if it's exempted, the value that you write in your examination will be zero. So try to remember all the exempt benefits and then move on to understand what is a basic rule of taxable benefit. What is a basic rule of taxable benefit? Can anyone tell me? Adjust the benefit provided for the period which it is provided to, period which it is provided for, and from that, eliminate any employee contributions. Yes, no, maybe? Is this a basic rule for taxable benefits? Correct? So try to understand this, the rule. This is the rule. But what did I say? What are the exempt benefits? Can you guys list a few exempt benefits? I know the list is extensive. We can't cover all of them, but probably can you list a few exempt benefits?
8,000 of relocating.
8,000 relocation, absolutely right.
50 pounds of small cash, like benefits, travel benefits.
50% trivial benefits, yes, 50 pounds of trivial gifts.
Yeah, and
Pension contributions made by the employer.
yes,
Beneficial loans less than
150
6,000.
rupees. Yeah, 150 rupees of staff entertainment.
150 pounds of staff entertainment. Okay.
Yeah. And actually, there are many, but still,
Yes, no
whatever comes
worries.
in
Let's
mind. Yeah.
all try to list a few. We are not trying to get the extensive list sorted right now because that is something that you will anyway prepare during your examination. So the other thing, one cell phone, also exempt. One cell phone provided exempted. Yes, no, maybe. Clear?
Staff canteen, food provided.
Food provided in the canteen. Food provided in the canteen. Nursery facilities provided.
Yeah, for the child.
Services provided. Absolutely. And I can see some coming in the chat box as well. Okay. So yeah, I think the list goes on and on. So it's try to remember majority of those rules. Very, very important. You have long service awards that are exempted as well for if the individual is working for more than 20 years and each year the gift value is not more than 50 pounds. Yes, no, maybe. Correct? These are all something that are majorly tested in your examination. So try to remember the bigger rules and then also ensure please do not leave out on any of the exempt benefit rules because you do not know which exempt benefit will be tested in your examination. All right. So try to focus on those. And then you will have to, once you understand all the exempt benefits and you understand the rules, then try to remember the rules of exception. Rules of exception. What is an exempt benefit? Accommodation provided for job purposes, yes? Or job related accommodation, we can say it.
No
Related
annual and no additional benefits.
job related accommodation is exempted. But not job related, we have some rules for it. One is higher of annual value or rent paid by the employer. Yes, no, maybe. Yes. Okay, great. And next, what if the value of the property is more than 75,000? Value of the property is more than 75,000. Then what will happen?
Then additional benefit will be given of 3.75 percentage. And there
Additional,
are also two pro forma for that. If we hold the property for less than 6 years, if we hold the property for more than 6 years.
yes, I'm coming to that, Yuti. Before that, additional benefit. Let's say the property value is 105,000. So will it be 105,000 into 3.75%?
No,
No, sir, minus 75,000, and then we have to multiply with 3.75%.
yeah, and also
Absolutely.
capital expenditure made on the property before 6th April.
Before 60. Yes.
Yeah, that can be taxable at 20%, right?
Which one? If the
The
improvements are made to the property is what she's talking about over here.
okay.
Yeah. Okay. So additional benefit, this is how we'll be calculating it.
So what
Absolutely right.
about the fitting and fixtures used by the employee?
Sorry.
What about
Fitting
the
and fixtures will
fitting?
already be included in the property value. Annual value will always include the profit, all of those. Okay.
So it's not taxable at 20%, right?
They will not be they'll not, unless and until mentioned it as assets provided. Like they're giving you a dishwasher and all of those fittings and fixtures will not be considered usually. Okay.
But sir, there is an example in Kaplan textbook where
Okay.
heating and
Heating and
something
lighting
like that.
again. Heating and lighting is similar to all the assets being provided. Always
But
remember
sir,
that.
in the book, it's taxable at 20%
Yeah, that
in one of
again,
the
that's what. If the
examples.
asset, it is all heating and lighting. If you see that question, I think it is relating to a job related accommodation.
Yeah, right, sir, right, sir.
Yes. Okay, when job related
So,
accommodation, the
but I just wanted to like ask one thing. For the heating, lighting, and those all expenses. So basically, those expenses we have to like not charge 20%, but the entire amount is taxable, right?
yeah, but if it is a job related accommodation, Yuti,
There is
you
10% limit.
yes, there's a 10% threshold. That is what the princess question was.
Okay,
Usually,
okay.
fitting and lighting and all of those expenses like the maintenance, cleaning costs, you'll be taking them in full. Okay,
And also the
but
10% or that is of employment income or the
and
entire.
that is of employment income. That major threshold will be stopped at 10% of employment income.
Okay.
All right.
Yeah.
Okay. So now we have considered the additional benefit. Now I have a doubt. Like Yuti has mentioned, there are rules of more than 6 years and less than 6 years. If it is less than 6 years, what do we take?
The actual purchase price.
We take the purchase price. Okay. But if it is more than 6 years, we take the market value and provide it to the employee. Yes. Yes, no, maybe.
Yes, sir.
But now I have a doubt. Let's assume the the property was purchased on 2011. Okay, at 54,000. Now the property value is 85,000. Will an additional benefit arise? It arise?
No, it will not because the purchase price is less than 75,000.
Absolutely right. Always remember, if the initial purchase price is less than 75,000, the additional value will not arise. Additional value of the property will not be taken into consideration, thus leading to no additional benefit. We should only be considering the additional benefit only and only when the purchase price is more than 75,000. Try to be very careful. This is some of the common mistakes that the students tend to make in the examination. It is not because they don't know the rule, it is because sometimes in their reading, they try to skip the pointers in the question. So try to highlight them as you go along so that it helps in ensuring that you're thorough with the concepts that you're practicing. Clear? Yes, no, maybe? Any doubts on these concepts so far? Again, what is the rule for this one? The next rule that you should remember, if the property is provided only for property is provided only for part of the year, it should be prorated. Yes, no, maybe. So try to calculate the entire benefit and then prorate it. Okay. Hope everything is clear until here. Same rule of less contributions. Next, let's move on to understand car benefits. Everyone, car benefit. Let's try to. Can you guys give me a revision of the car benefits?
So there is a like calculation to be done for emission percentage, and
Car.
that is like if it's a petrol car and it meets the RDE2 standard, also diesel car, if that meets the standard, then the performer is like the calculation goes like the emission which it is made to like nearest like 160. If it's 162, then it's 160 and minus 55 divided by 5 plus 16%.
So
So that's
first will be
17.
taken. Yes, always remember it will be first. It will be given to you about the CO2 emissions. If it is 51 to 54, we know it is 16% for petrol cars and diesel cars meeting the RDE2 standard. And if it is not meeting the standard, it is these percentages plus 4. Clear? Yes, no, maybe? So that will give you the appropriate percentage. But if your cars exceeding 55 grams per kilometer, then how do you calculate your percentage? Excess over 55 divided by 5. So how much is the excess? Over 55 divided by 5 will give you the additional percentage that should be added to the 17%. Let's assume the car has 92 grams per kilometer. So first thing that we should be doing is rounding it down. Even if it is 94 grams per kilometer, always remember your rule should be 90 minus 55 is what you should be doing and not rounding it up. Clear with me? Yes, no, maybe? Yes, no, maybe? 55 divided by 5 is how you'll be calculating it. So then it will give you additional 7%. So this 7% should be added, giving your total value to be at 17 plus 7% of 24%. So that amount should now be multiplied with your list price. Usually, if there's a purchase price given and list price given separately, which one should you be considering when calculating your car
List
benefit?
price.
Always remember you should be calculating your using list price, because list price is something that includes all your insurance costs, and all of those are included as a part of it. So you need not have to calculate it separately. It should always be based on list price. And what is the maximum amount that this percentage can go up to?
37.
7.
37%. And is it 37% for petrol cars and petrol? And for
Both.
non-RDE2, is it 41? Or is it 37 only?
No, for both it's 37.
37%. Absolutely right. It will still be at 37% only. But here, the rates will change because over here it will be 21 and plus 7 will give you a total of 28% if it is non-RDE2. Clear? Any doubts on any of these concepts so far? Yes, no, maybe? So over here, the next thing that you should be remembering is about less contribution. Usually, what do we do contributions? How much ever are the employee contributions, we deduct them, correct? But here, how much contribution can we reduce? Only up to a maximum of 5,000. Even if the individual has contributed 7,000 or 8,000 or 8,000, the contribution that you reduce will only be at 5,000 pounds. Clear? Yes, no, maybe? Any doubts on any of these concepts so far? Can I get a thumbs up if you guys have understood the concepts until here? All right, great. So this is how you will be having your car benefit. Similarly, you'll have for van as well, where you van. How do you do the calculations? Can anyone tell me van benefit? What will happen?
4020 is the fixed amount and
Fixed
769 if the fuel is given.
Absolutely right. 4020 is fixed amount, but sometimes you do not even have to remember that because it will be provided to you. Van benefit scale charges 4020 and fuel is 769. And for car fuel, if a car fuel is provided, what will you take? 28,200? Should we take the direct 28,200 or should we do something with that?
Into CO2 emission
Into
for the
the
car
emission,
benefit which we took.
into the appropriate percentage that whatever has been taken over here should be taken for the fuel benefit as well. Clear? And then it should also be prorated for the period that it is provided to as equal to all the other rules as well. Clear? Any doubts until here, or are the concepts clear, guys? Yes, no, maybe? So if any assets are provided to the employee, what do we do? Assets
We'll
provided.
calculate usage benefit.
We'll calculate the use. How do we calculate that?
Into 20%.
20%.
Into 20%. Absolutely right. If an asset is gifted to the employee, then how do we calculate it? This is not provided for usage, but it is gifted to the employee, asking the employee to use the asset for his purposes.
If it's
Then
first-hand asset, then the purchase price. And if it's second-hand asset, then it's market value. But if it's like the asset was first provided to the employee and then it was gifted, then there's calculation for that. And they're like higher of price paid by, no wait, the market value of which the asset is. And then we
absolutely
deduct
right.
the price paid by employee. And there's another one which is again the market value, but when it's first provided for use, that market value which we have to take less the benefits which are already taxed, and the
The
third one
20%
is
benefits praised in the prior years that the price
yeah
it was used for. Yes.
yeah benefits already taxed is 20%, and then we have to again deduct the contribution made by employee.
Absolutely right. Can everyone give a round of applause for Yuti? Can very clearly explained, Yuti. Really good. I hope that the clarity is very clear. I understand that. All the best for your preparation and the questions that you write. Really very well explained. This is all that had to be known about the assets gifted to the employees. Is anyone else having any doubts on this concept? All right. So now once all of these are done, beneficial loan, we should be taking the 3.75%, and beneficial loan should be considered only if the amount of loan is greater than 10,000. So if you're able to remember all of these, the taxable benefits, employment income becomes a cakewalk. But let me tell you something. When you're calculating employment income, and there are any exempt benefits being provided, you should indicate them with a zero. Employment benefits, let's say employers pension contribution. You should include it in your employment income computation and mark it with a zero over here because it is exempted. And even though your final answer will not change because of this, but if you miss out on this one, you will lose out on half a mark because this is an application of the concept that you have studied, that any exempt benefits will not have impact on the employment income, which is calculated as your salary plus bonus plus taxable benefits provided to the employee. So, for that reason, it is very, very important that if there are any exempt benefits, you mark it with a zero, including it as a part of your benefits provided. Clear? With me on this so far? This plays a very important role in your presentation of your answers in order to get your answers right. Okay? Yes, no, maybe? Can I get a thumbs up, guys, if you have understood the concept of employment income? Everyone? If you have any doubts, please reach out to me and I'll be happy to help you out. Okay? Next, post the employment income, what do we have? Pensions. In pensions, there are primarily two types of pensions. One is personal pension schemes, and the other are occupational pension schemes. Occupational pension schemes. What happens when you contribute to personal pension schemes, and what happens when you contribute to occupational pension schemes? Occupational pension scheme is something that you should remember because in pensions, majorly in the questions that I've seen, I never see it as a part of your income that is being calculated, but it will usually come as a part of the deductions that are included. So for that reason, whenever you're contributing to personal pension scheme, what will happen? First, it will be grossed up by HMRC, and then if grossed up by HMRC, if you are a higher rate taxpayer, then your basic rate band or basic rate band and additional rate bands also increase by the amount of gross personal pension contributions. Yes, no, maybe? Yes, no, maybe? Are you guys with me so far? So pension contributions will not be deducted from your income, but what will happen? They will increase your rate bands. And also, if you're paying £80, the HMRC will gross it up and make it £100. Clear? Yes, no, maybe? That is about that is about your personal pension contributions. But when you come to occupational pension schemes, employee contributions deducted from your employment income, while employer contributions contributions are exempt benefit. Is that clear? Employer contributions are always considered as exempt benefits. Any doubts on any of these concepts? Pension majorly will be testing you on the contributions made rather than on it being a part of your incomes. Okay, so that is about pension income. And then moving on to the most important aspect, which is income from self-employment. Income from self-employment, again, what is the default basis? Is it cash basis or accrual basis?
So cash basis mostly.
Cash
But
basis
if
is the
it's
default
not.
basis, but majority of the questions usually will be testing you on accrual basis only. Okay, accrual base. Cash basis is the default, wherein we write about how. What do we write about cash basis? How much is the cash received minus the expenditure is how we will be having our cash basis questions. But when it is accrual basis, we should be starting point for our question will be from the profit or accounting profit of the entity. Clear? Profit of the entity. And when it is accrual basis, you will have to add back disallowed expenses, allowed expenses like non-cash expenses. Non-cash expenses. Yes, no, maybe. Can anyone give me an example of non-cash expenses?
Depreciation.
Depreciation, absolutely right. Depreciation. The other will also be
Amortization.
amortization. Yes. Loss on sale of assets. Yes, no, maybe. Loss on sale of assets. Sometimes it is considered as a part of our accounting profits, but because it is disallowed, it should be added back. Then fines. Fines are also disallowed. What is an exception to the fines being disallowed?
Like employee parking.
Employee parking. Absolutely right. Other than employees fines relating to the parking, all the other fines are disallowed. Clear? We should add back disallowed expenses. And then what should you deduct? What should you be deducting?
Capital allowances,
You should deduct capital allowances and also
lease premium,
disallowed incomes. Yes, like gain on sale of
Also,
assets. Yes, no, maybe. And also your lease premium paid. Absolutely right. So these, once you're deducting all of these, whatever you get will be your taxable total profit. Taxable total profit that will be included as a part of your non-savings income. Clear? Any doubt on any of these concepts? Again, whenever you're preparing this one, very important to know the list of disallowed expenditures or income, so that you can consider those appropriately. Disallowed
I have
expenditures
a
should be added back and incomes should be subtracted. Yes, Yuti.
So I had a doubt in disallowed expenditure of lease of car. I was solving a mock a few days back, and in
Okay.
that there was a question for car like related to car lease, and it's like when the emission of the car is more than 50, then you have to
15%
take
is disallowed.
15%, right?
15%
But
is disallowed.
yeah,
So it should be
15% is
added.
disallowed, right? So,
Yes.
but the question mentioned that some percentage of the car was used in private use and some percentage was used in business. So,
Okay.
sir, in that, how do we calculate the lease
Can you probably
of
send
the
me the
car?
question after this session, Yuti? Probably I can to take a look
Yeah,
at it?
sure. I can. Yeah, sure. I can.
You can
Yeah.
send it to me on WhatsApp. All right.
Okay, I will. I will. Okay.
Okay. So always remember, this is how you'll be doing this. Okay. Any doubts on this one? Disallowed expenses, very important to take a look at them. Any other types of income, are they allowed, like your gambling incomes and all of those? Yes, no, maybe. Are they allowed?
No, sir.
So what should we do with those? If they consider gambling income as a part of your accounting profits, you should be removing it. Clear? Yes, no, maybe.
Yes, sir.
All right. That is how we will be considering all of these. And then once you do that, you should be calculating your pro forma is very, very important. Any disallowed expenses that were not considered, disallowed expenses that were not considered in profit calculation, in profit computation. What do you show them with? Zero. Yes, in profits, this disallowed expense was not included. But when you're calculating your taxable total profits, you should show that disallowed expense and mark a zero beside it. Okay? Let's say they have given a profit of 45,000, but it does not include depreciation. It does not include depreciation. So what do? You should show profit
Deducted.
45,000, then depreciation, and write it as zero. Clear? Because anyway it was not included. So you should mark it with zero. But it says profit of 45,000, but it includes depreciation of 15,000. In that case, what should you do? You should add it back. You should add back 15,000. Clear? Yes, no, maybe?
Yes, sir, clear.
That is how you should be calculating it. And then comes the most important part, which is your capital allowances. Can anyone tell me how many different types of capital allowances do we have?
Main pool, special rate pool, short life asset, private use asset.
First, we have annual investment allowance. Then we have written down allowance. Yes. Different types of allowances that are available. AIA and WDA. Yes. And we have
FYA.
first year allowance. Anything else? Structures and building allowance. These are the major types of allowances that we see. Yes. Yes, no, maybe. How much is your annual investment allowance? What is the limit? Do you have to remember that? Not necessary, because it will be provided to you in your examination. Do not have to remember all of the limits and what are the percentages. The rates will be clearly given to you in your examination. So all you have to know is how to apply the concept. Like, are cars eligible for AIA? Yes, no, maybe.
No, sir.
No.
Cars are not eligible. But are they eligible for WDA?
Yes.
Yes.
Absolutely right. Cars are not eligible. But WDA, you get them based on the pool that they belong to. Main pool, what will the main pool have? Main pool will have majority of the assets and cars between 1 to 50 grams. Yes.
Yeah. And also second hand 0% emission cars.
Yes, coming to that. That is the next point that I'm writing. Because FYA, you get it on cars with first-hand cars with zero emissions. But if they're second-hand, are they eligible for FYA? Are the second-hand cars with zero emissions eligible for FYA?
No, they are not.
They are not. Absolutely right. So when should you should then only be considering them only as a part of your main pool. Here you'll only have second-hand cars with zero CO2 emissions. And next that you have, once you are having a main pool clear, what is the other thing that you should know? Your special rate pool. All the assets, if you know what all are the assets that are forming part of special rate pool, you know all the assets that are not part of it will be a part of main pool. Yes, no, maybe? Yes, no, maybe? And what all are assets included as a part of our special rate pool? Long life
Long life
assets.
asset.
Can
Heating
you tell
system.
me what long life assets should have two features? What are those two features?
Uh,
Over
the
25 years.
yeah, 25 years.
Life greater than 25 years. And also the other thing should be
Cost, cost more than 100,000.
cost more than 100,000. Now, let me ask you a question. The cost is 105,000. Okay, I think I'm adding another zero here. Cost is 105,000, but the life of it is only 20 years. Will it be considered as a long life asset?
No, then main pool.
It will be a part of main pool. Very, very important point to remember. It should satisfy both the conditions, both life greater than 25 years and cost to be more than 100,000. Very, very important. And the next is your integral features of a building. Yes, like heating and lighting and all of that. Yes, no, maybe. Heating and lighting, sewage systems, all of these will be a part of your special rate pool. Yes, no, maybe. Yes or no? Guys, are you with me or are you getting lost? Probably we are close to completing the topic. Next, we'll move on to the question itself. But it is very important that you're thorough with the concepts, which is why we're doing this. And yes. So once you understand the main pool and special rate pool, what should you know? What will be the WD of special rate pool? That is your written down allowance. What will it be?
Percentage.
18%. And for special rate, it will be
6%.
6%. Absolutely right. Now, once you have understood both of these, the next thing that you should know it is about private use assets. If there are multiple private use assets, do we club all of them into one private use pool?
No.
Yuti says no. What about the others? Private use asset, let's say there's a private use asset 1, asset 2, and asset 3. Can we include all of those as a part of one private use pool or should they be in multiple pools? Anyone?
Multiple columns.
Absolutely. They should be included as a part of multiple columns. There are multiple private use assets. All of them are to be included at multiple columns, not into one column. Clear? And from that, how do we do it? What should we be doing it first? Let's take a private use asset is of 10,000. Then what do? We should reduce WDA and let's assume it's a main pool asset at 18%. We should be reducing it into 18%. But how much should be transferred to the total allowances column?
Only business use percentage.
Only the business usage percentage. Absolutely right. There's private use. Here, though we calculate full WDA in this column and the balance carried forward will be based on the total WDA, the allowance that can be claimed on it will only be the business usage. So let's assume it has 40% business use. Then we'll take only the 40% of it. But written down carried forward value will be this plus this one. So next year on this, it will be on 8,200 into 18%. Is this clear with everyone? Yes, no, maybe. Many students try to calculate the WDA here itself, and in the allowances, they take the full amount. But the WDA that you should be calculating should be on the full. But in the allowances column, the amount that you take should be based on should be based on the business usage portion of it. Clear with capital allowances now? Any doubts on any of these concepts? Yes, no, maybe. All right. So now I can see. Yes, with the cost plus all improvements is less than 75,000, then no accommodation benefit. No additional benefit arises on it. Okay? I've just seen the chat on that. So now, once you've considered all of these, you've considered all the different types of incomes, but we know all of these, there is a possibility of losses being made. Losses being made. So when there are a business is having losses, how can you eliminate them? Can anyone tell me how the trading losses for individuals are dealt with?
So for opening years, ongoing years, or
No,
like
first for ongoing years, ongoing business. Opening years and closing we'll be discussing later.
okay, there are two ways in which we can do. So first is we can carry forward it, but there's a rule like you can only, if you're carry forwarding the loss, then you can only carry forward to the same trading income which is being made, and no partial offset is allowed. You have to offset the entire amount which is available for the relief.
Correct.
And there's one more option in which you can like from total income, which is current year and carry back
Current year and or
and
carry
carry
back.
back. Yeah,
So it is not necessary that you'll have to only set it off against current year and carry it back. You can either do it in prior year and current year, or you can do it on only prior year
in both.
and both
You
years. Okay.
yeah,
Unlike
either way.
unlike
And
corporation
then
tax, we'll
CGT.
discuss tomorrow. So
And
current year
then
and or carry back, total income,
after we
and
have offset from total income, if the still
then we can.
like still remaining, then chargeable gain.
This is an optional method that we have got. If there's any losses that are still left over, then you can set it off against chargeable gains, or you can decide to carry it forward. Clear? This is for the ongoing years. But what about the opening years of loss? There's one more small rule that I would want to highlight when you're talking about total income. If you're setting it off against total income, what is the maximum loss that you can set off? You can set off, it is greater of 50,000 or 25% of adjusted total income. Yes, no, maybe?
Yes.
And what is your adjusted total income calculation?
Total net income plus the pension contributions we have made. But a thing to be noticed,
Employment pension or occupational pension or personal pension schemes?
personal pension scheme
Absolutely right. Yes, personal pension contributions.
and donations are not considered
Oh,
in this.
yes, only personal pensions contributions and net income are to be added back. Net income are to be added together. And of that, 25% is the maximum that you can set off against your total income. But I have a question. But if you're having trading income in the prior year or in the prior year, then you can set off against trading income in full. Trading income in full. And this rule will not be applicable. Clear? This rule is, as in I'm talking about the 50,000. It is only applicable if you're setting it off against total income and not against pure trading income. Yes, no, maybe? Clear on this concept as well, everyone? Anyone has any doubts? All right, great. So next, let's come to opening years. In opening years, what do we do?
Special relief of 3 years carry back.
We can carry it back for 3 years. When it is carried back for 3 years, and it is applicable for the first 4 years of trading. For the first 4 years of trading. Yes, no, maybe? Applicable for the first 4 years of trading.
And in FIFO method.
Yes, this is where FIFO method is applicable. What is meant by FIFO method? Let's say your opening year is 25-26. Then you can carry it back to when you should first set it off against. Let's write 24, 25, 23, 24, 22, 23. So first you should be setting it off against this year, then second and third. Yes, no, maybe? Yes, no, maybe?
Yes.
Now, what about your terminal loss relief? Terminal loss, when can you set it off? If
In cessation year.
yes, in the year of cessation, and can be carried back. Yes, no, maybe?
Repeating 3 tax years.
Carry back 3 tax years. But what is the rule here? It should be set off in
Same
LIFO
trade and
basis.
LIFO method.
Leave for
LIFO
method.
basis and same trade. Absolutely right. So these are the rules that are important in total for your total of income tax. Once you're thorough with all of these rules, it becomes easier to solve these questions. And very good, guys. I have seen a good amount of participation this time. I have appreciate that and very good understanding of the concepts as well. Okay. So partnership is very much similar to income self-employment, but it is just that once the profits are allocated to the individual, you should take it in that person's individual income tax. Clear income of the individual separately. Once the income is calculated, then what should you do? You should be calculating. Always remember, whenever you're solving your questions, if there are multiple income streams involved, always present it as non-savings income, savings income, and dividend income, then your total. Why are we doing it? The major reason why we tend to do it is first to calculate your total income streams because you have different rates for different rules for non-savings, savings, and dividend income. And the other reason why we are doing it is because of personal allowance priority. Personal allowance, what is the first priority given to personal allowance? Is it non-savings income, savings income, or dividend income? First priority is to non-savings income. Then second priority, is it to savings income or dividend income?
Savings.
Absolutely. Savings income. And then we give the priority to dividend income. Clear? Third priority. So in order to understand how it is to be eliminated, it is always very important that you present your income tax in this format. We will be solving a question on this as well. So you'll be able to understand it better. Once you calculate your total incomes, then you can reduce your reliefs that you get, giving you your net income. From that, you eliminate your personal allowance, giving you your taxable income. Once your taxable income is calculated, first you should be calculating tax rate should be applied for which one first? Application.
NSI.
Also, first, your rate bands will first be utilized by rate bands will first to be utilized by non-savings income, then savings income, and then dividend income. And that is how your tax calculation should also be done. First, calculate your tax liability for non-savings income, then savings income, and then your dividend income, which will give you your total tax liability. And from that, you'll have to deduct any payee in order to calculate the tax payable. Always remember, If the question asks you about calculate income tax liability, your answer should stop at this point. But if they say calculate the income tax payable, calculate income tax payable. In that scenario, you should deduct your pay as you earn in order to get your tax liability. Clear? Any doubts on this concept so far, guys? Any doubts, anyone? Okay. So tax liabilities will also include what all, as we already know, we know that marriage allowance will be a tax reducer. Finance cost will also be a tax reducer that we have already discussed. So after that, these are the tax rates that are applicable. It is 20%, 40, 45 for non-savings and savings income. But for dividend income, it is 8.75%, 33.75%, and 39.35%. Again, do you have to remember these? They will be provided to you in the examination. Do not waste your time in remembering the tax rates. Try to utilize that time for solving the questions better and trying to understand the concepts better, but do not remember the rates at all. Okay, honestly, I am telling you, during my preparation, I did not remember any of these rates. Sure, some of those like 20, 40, and 45, I remember them out of practice, but dividend income rates are something, honestly speaking, I don't even know even until now. Even now, I'll have to always refer to these. And why do I do that? Because it helps in saving my preparation time and focusing on important aspects of preparation. Clear? Try to utilize these as much as possible. Try to make it a practice when you're solving the questions as well, so that it becomes easier for you during your exam preparation or writing your final marks and your final examination. Yes, with me so far?
Sir, I have a doubt.
Yes, you do.
So basically, when we like pension income, let's talk about the pension income. So in that, there's like a restriction if the income is irrelevant income. If we have relevant income, then it's like we can like invest in the pension as much as the annual allowance of
Allowances.
50,000.
Yes.
Yes. So, but sir, if the person has both the incomes, irrelevant income and relevant income of let's say 20,000. So we took 20,000 of the relevant income. So also can we take 3,600 of irrelevant income and take for pension income
No,
or
we can't. We should only be considering the relevant income portion of it. Okay.
okay.
Only the relevant income will be considered for your pension calculations for tax relief and all of those purposes. Okay.
Okay, sir.
Yes. All right. With that, we have completed our revision of our income tax. Are you guys? Did you understand the concepts? Were you facing any issues in understanding the concepts? Was everything clearly explained? Is everything good? Or do you think you need some more revision on the concepts? Yes, no, maybe. All right. Now let's start off with our questions. We'll start solve a question from our pre-September mock. We'll try to understand how the calculations are to be done and all of those. Yes, no, maybe. Are you guys ready? Guys, can I get a thumbs up so that we can start solving the question? I want to understand if you guys want a 2-minute break or you're ready to solve the question.
Sir, I'll take my leave because at 4 p.m. I have a mock to give and I have to revise corporation tax and everything for that. So
Sure,
I'll take my
Yati. All
leave,
right.
sir.
All right.
Yeah. Thank you so much. It was a good session, sir.
All right, Yati. Bye. All the best for your mock.
Thank you, sir. Thank you.
All right. So let's start off with the question. Yes. So Joyce was an employee of Arco Limited, a UK resident but resigned on 30th June 2025. For the 2025-2026 her annual salary has been 70,000. So here it clearly says that she had been working with Arco Limited, but she resigned on 30th June 2025. Guys, again, whenever there are dates in tax, dates play a very, very crucial role. So it is important that you actually take a look at all of the dates and try to remember them. Her annual salary had been 70,000. So should we consider her entire annual salary for tax computation?
No, sir.
No, because we should only be considering it
The
until
portion that.
absolutely right. We'll be considering it only until 30th June. And she was awarded a bonus on 30th April 2025 for her performance during the prior year. Do we consider the bonus or not?
Yes, sir.
So we'll consider.
Though it says it was for a performance during the prior year, because she is entitled and receiving the bonus in the current year, which is after 5th April 2025. So it will be included as a part of her employment income. So this is about the first employment. And then it says on 1st August 2025, Joyce started working with Cairo Limited. So is he working immediately from 1st of July? Or was there a month break?
There was a break.
There was a break. So you should be taking the salary only from 1st August to 5th April 2026. Yes, no, maybe?
Yes, sir.
And then it says there is an annual salary of 73,500. Because 73,500, again, it should be prorated. But Joyce was provided with the following benefits from the day she joined Cairo Limited. Joyce was provided with non-job related accommodation. The annual value of the accommodation was 15,000 and company paid a monthly rent of 750 for it. So it is non-job related benefit. So will it be a taxable benefit or will it be an exempt benefit?
Flexible.
Taxable benefit. So there have been two values given. One is the annual value and the monthly rent. So in that scenario, what should we do? What should be considered? It should the higher of annual value and rent paid or lower of annual value and the rent paid?
Fine.
Any? Sorry, I couldn't hear you, Matushu.
Higher of actual and annual.
Higher value of the annual value and the actual rent paid. Absolutely right. So, and it also says Joyce also pays 200 per month to Cairo Limited as rent for the accommodation. So this is nothing but the employee contributions which should be deducted. Yes, no, maybe.
Yes, sir.
Yes, sir.
So now that is considered. After that, what do we have? Joyce was also provided with a new diesel car with a list price of 31,000. So here, 31,000 is to be considered. Now, Joyce has both business and personal use of the car. When an employee taxable benefit is being provided, do we prorate it for business use and personal use?
No, sir. It is irrelevant.
It is irrelevant. So whenever you find such irrelevant points, try to strike it through so that you don't get confused. Next, it says the CO2 emissions of the car are 84 grams per kilometer. So it says it is 84 grams per kilometer. And next, Joyce made a one-off capital contribution of 4,200. Because it is less than 5,000, do we take the full amount?
Yes, sir.
Cairo Limited also provides fuel. So here we should be taking the fuel benefit also into consideration. The car meets the RDE2 standard. So should we take the diesel prices of plus 4% or should we take the normal
Normal,
percentage?
sir.
You should take the normal percentages. So because of that, this point also becomes very, very important. And post this, what does it say? Personal pension scheme contributions. Joyce contributes a gross amount of 5,000 in personal pension scheme. Here, a gross amount has been given to us already. So do we have to gross it up by doing 100 by 80?
No.
Not necessary. Absolutely right. So what will be the effect of this contributions made into personal pension scheme?
Increase in the rate line.
Increase in the rate bands. Absolutely right. And Cairo Limited pays 10% of Joy's salary into the same scheme as an employer contribution. Will it affect our employment income any manner?
This will be exempt.
It will be an exempt benefit. Absolutely. So this is being an exempt benefit. And then it says Joyce received interest of 4,000 from her bank and 7,000 from dividends from her shares in various UK companies. So these are dividend income. And what about interest? Where will it be a part of?
Saving.
Savings income. Correct. A total payee amount of 29,000 has been paid on behalf of Joyce by both her employers for the tax year 25-26. So a payee amount has been given to us. Now the question is, calculate Joyce's income tax payable or refundable for the tax year 25-26. So here we are calculating income tax payable or refundable and not income tax liability. Keep that in mind. When it is income tax payable, what did I mention earlier? It
We
should be
will deduct the pay.
absolutely. So it will be total tax liability minus any payee already paid out will be your tax payable. But if we are getting a negative amount, that means it will be refundable. Clear? Any doubts so far?
No, sir.
Let's start off with the solving the question. Sis? So we'll write it as Joyce's income tax liability for the year 2025-26. Write this as your first point. And as I have mentioned, always try to divide the income because there are multiple types of income. So try to write it as non-savings income. Next will be your savings income, and then your dividend income. Always try to write it in this manner only. Dividend income, and here will be your total. Always mention it in this format. And then when you're solving the question, very important, go in the order of the facts provided to you. So what is the first income that you have got? Employment income from ARCO.
Government income.
So employment income. In this, you have multiple types streams. So first you write about ARCO Limited. Yes. In ARCO Limited, there are multiple in calculations. One is to prorate it, and to that you will also have to add a bonus value bonus value. Yes, no, maybe. So when there are multiple calculations involved, instead of doing the entire calculation into one formula, try to show it as a separate working. So working one, try to keep it. Usually you can do it either at the end or you can do it in the beginning part of it, whatever method works for you. But usually what I tend to do is I tend to keep it to the side so it becomes easy to refer to. Okay. All right. Now let's probably keep it here as well. And then let's write our working one. Working one would be choices income from ARCA Limited. ARCO Limited. ARCO Limited, sorry. So ARCO Limited, how much is the salary? Salary from 6th April to 30th June. How many months is that coming up to? 3 months? Yes, no, maybe?
Yes.
Yes, sir.
So it'll be is equal to 70,000 into 3 by 12 will be 17,500. To that, we should add bonus, which will be 5,000, making her total income to be at is equal to 17,500 plus 5,000 to be 22,500. And again, a very important point, if you do not try to take a look at the answer here and write it, but instead try to relate them so that the mistakes of transposition usually tend to go down because of that. Because though you've calculated it correctly here, But sometimes while transposing, you just write 22,000 or 23,000 are common mistakes some students tend to make. So try to relate to what you've already calculated. That will help in eliminating those mistakes. All right. Yes, no, maybe.
Yes, sir.
Next, we have employment income from Cairo Limited. So is Cairo Limited's income computation straightforward, or do we have multiple calculations to be made in that as well?
Great.
We have taxable benefits as well included, right? So we will show it as a separate working again. Try to show it as a separate working, right? Working to employment income from Cairo Limited. So how much will that be? First, what do we take? Salary? Yes, no, maybe?
Yes, sir.
Which is equal to how much? 73,500 into 8 months, because it's only from August until 5th April. Will be 8 by 12. And to this, what should you start adding?
Accommodation benefit.
You should start adding taxable benefits. Absolutely right. So first we have our accommodation benefit. Accommodation benefit, again, do you think there are multiple calculations? Because we should see higher of the annual value and rent, or the contributions? Yes, no, maybe? So accommodation benefit, try to show it as a working 2.1, which will always try to keep it in this manner so it becomes easier for the examiner to read them. So working 2.1 accommodation benefit computation. Computation should be first, what will we consider? Higher of annual value. We know the annual value is 15,000, and higher of annual value or rent paid by the employer, which is higher now, which is equal to 750. Do we take 750 into 12, or should we take 750 into 8?
1015 to 8.
Into 8, which is coming to 6,000. So what should we be considering as the higher annual value? Higher value?
Yeah.
Annual value. Absolutely right. So we'll consider annual value. And now we have considered annual value to be at 15,000. Do we consider the total amount?
Yes, sir. Maybe.
Is it provided for the entire year? Isn't the
8
property being
months.
provided? Absolutely right. So you should be taking it prorated for 8 months into 8 by 12. So here you should tell annual value prorated for 8 months. So from this is your annual value. So you considered this one, and rent is irrelevant for us, so we'll strike it off. Now, also pays 200 per month. So that should be reduced. Less contributions made by the employee should be reduced. Yes, no, maybe?
Yes, sir.
So how much are the contributions made by the employee now?
200
Yes.
multiplied with 8 months.
Into 8 is 1,600. So what will be the total value of the accommodation? Total taxable benefit of property of accommodation. How much will it be, guys? 1,600. Yes. Then minus 1,600. Yes, no, maybe. So it will be this one. So accommodation benefit is considered. Next, we have car benefit. How do we calculate car benefit? Again, a separate working is required. Yes, no, maybe.
Yes, sir.
So we'll write it as working 2.2. So you can simply show that here. 2.2 into 8 by 12. So 2.2 into 8 by 12 is 1,000. 1,000 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 into 8 by 12 is 1,000. working 2.2 will show it as. What is the list price? 31,000.
31,000.
Appropriate percentage. How do we take appropriate percentage?
First,
How much
we'll
it,
round down to 84 grams. So 80 grams minus 55, then divide up to 5, and
so
70
80
percentage
grams
will be
minus 55 divided by 5. Yes.
Not
yes, sir.
So once you do this to this, how much should you add? Do you have to remember it? You can take a look at
17%.
tax table, which is 55 grams is 17%. So it will be plus 17, which will give us 22. Yes, no, maybe? Yes.
yes, sir.
So now what will be the car benefit? So from it will be equal to 31,000 into 22 divided by 100. It will be 6820. Yes, no, maybe?
Yes, sir.
But is this the total amount? Or do we have to reduce something? Anyone? Are you missing out on something here?
Will apportion for 8 months.
Before apportioning, there's something else that is to be considered?
Capital contributions.
Absolutely right. So here, first, before we do this, first always remember it will be less capital contributions. How much are the capital contributions now? Minus 4,200. Clear? So once we know this, how much will our price be? It will be 31,000 minus 4,200. To this, what should we do? We should be doing the into this by 100. Clear? Yes, no, maybe?
Yes, sir. No.
Is everything considered here now? Are you sure?
Yes, sir.
Don't we again, guys? We are missing out on one more fact. We have to consider for 8 months only. Like this is over here, because because the individual is getting it only for 8 months. We should be taking it only for 8 months. So car benefit prorated for 8 months. Are you getting why we're doing the prorating part of it? Any doubts on this one? Hmm? Guys, with me and without me, are you with me or are you having any doubt in understanding this concept?
Yes, sir. Clear.
Yeah. So here we should take it 3930. Now, along with car, what is being provided? Fuel is also being provided.
Yes, sir.
So fuel benefit will now be equal to how much?
28,200 multiplied with 22 percentage.
Absolutely. It will be is equal to 28,200 into 22% into 8 by 12.
12, yes, sir.
So this will be a total car benefit. So total will now be equal to 3931 plus 4136 will be 8066, which is what you should be including here. Clear? Car benefit is taken now. So 3930.7 and 4136. Both of this is considered. Any doubt on this one so far, guys? Anyone have any doubt so far? So now, have we considered everything that is to be considered? We have considered salary, we have considered accommodation, we have considered car as well. Is there any other thing that should be considered? Pension contributions? Yes, no, maybe. Employer pension contribution. How much do we take it as? Anyone?
0.
0. Very important to note this. If you don't write it, you will lose your half mark. So please make it a point that you write it completely. Clear? So total employment income from Cairo is now is equal to 49,000, which is your salary, plus 8,400, plus 3,930, plus 4,136, plus 0, which will give it 65,467. So here is the most common transposition error that can happen. We can write it as 647 or 567 in all of those. So for that reason, try to take the value only from here so that you do not make such mistakes. Okay. And if you're getting multiple values like this, either try to put it for 2 zeros, or you can try to keep it at a rounded figure as well. No issues with any of those. Okay. With me so far, guys? Any doubts on any of these concepts until whatever we have solved? Any doubts on any of them? So non-savings income is calculated. See, now what is the next thing that is there as we have to go in order? Will personal pension contributions affect any of your incomes? Will personal pension contributions, will they affect our incomes in any manner?
No, sir.
No. So next, what do we have? We have interest received. So interest received, interest income. Where will it be a part of?
Savings.
Savings income of 4,000. Absolutely right. And then we have dividends received. Where will it be a part of? Dividend income? Yes. So 7,000. Making your totals to now be at equal to sum of all of these. Yes, that's how you will calculate it. Yes, no, maybe. And you can simply drag the formulas. Our total will now be at 98,967. Clear until here? Are you having any doubt so far?
Yes, sir.
So from this, what should we be deducting now?
Personal allowance.
Absolutely right. Less personal allowance. Personal allowance, what should we be allocating it between three of them, or should we deduct in full against non-savings income?
Full.
Whole. Absolutely right. And how much is our personal allowance? Refer to the tax tables. Though it feels like you're wasting some time, it will always be better to take a look at it, which is 12,570. And now, because your adjusted net income is less than 100,000, you will be having your full personal allowance available? Yes, no, maybe? Yes, no, maybe?
Yes.
Yes, sir.
So taxable income is now is equal to this plus this. Can be mentioned as this one. And here again, you can scroll it forward. So you'll get these as your taxable incomes. Now, what should your next thing be? Tax liability computation. What did I say? First, what should be giving your priority to tax computations?
NSI.
NSI. So, total tax on non-savings income. How much will that be calculated as? First, you should have your rate band. How much will your rate band be now? Basic rate band 0 to
It will be increased by 5,000.
so how much will it be? 37,700 plus 5,000 will be 42,700. Yes,
Yes, sir.
at 20%. So now we know it will be 42,700 into 20%. Now, what is our higher rate band? Anyway, because the individual is not going to additional rate band, we know the entire income will be part of higher rate band only, correct? Because higher rate band starts from 125, 140, but our taxable total income itself is at 86,397. Yes, no, maybe?
Yes, sir.
So higher rate band will now be at, now for this individual, higher rate tax is applicable at is equal to 75,397 minus 42,700 into 40%. Yes, no, maybe? Excess of the taxable income minus 42,700 already charged will now be taxed at 40%. Correct?
Yes, sir.
So this is what will give you your total tax on non-savings income. Next, we'll calculate total tax on savings income. Do we have zero? Do we have nil rate band for non-savings income?
No.
No.
Yes, sir. 500 will be provided as
Absolutely. Because if he's a basic rate taxpayer, you get 1,000. But because he's a higher rate taxpayer, you get 500 at 0%. So it'll be 0. And next, how much is the remaining amount of savings income?
3,500.
Meaning is at 3,500. So it'll be is equal to 4,000 minus 500. What rate should we apply? Should we again start at basic rate of 20% or will it be at higher rate?
Higher rate.
Higher rate.
Higher rate. Absolutely right. So it is 40%. So I've considered savings income as well? Yes, no, maybe?
Yes, sir.
Next, what are we left with? Total tax on dividend income. How much will that dividend income? Do we have nil rate band?
Yes, sir.
So
500.
500.
Irrespective of the rate of rate band of the individual, it is 500 at 0%. So it will be 0. Remaining will be at is equal to 7,000 minus 500. What should be the percentage taken? You can take a look at it. Do we take 33.75 or 39.35?
33,700.
33.75. Absolutely right. Into 33.75%, it will be 2193.75. So we have considered all incomes, non-savings is considered, savings is considered, dividend is considered, and personal pension scheme also is considered. Is there anything that we are left with? So we calculate our total tax liability, which will be a sum total of all of these, which is nothing but equal to this all the way till here. If you scroll it, will give you your answer of 25,212. Yes, any doubt so far? Total tax liability is 25,212. But how much did the payee pay already?
29,000.
So did they pay more than our tax liability?
Yes, sir.
So we'll have total tax refundable.
Yes, sir.
So that is what we should write. Tax refundable to Joyce is now at is equal to 29,000 minus 25,212, which will be 3,787, or you can round it off 3,788. Clear? This is
Yes,
your
sir.
amount. So calculate a Joyce's income tax refundable for the tax year 25-26 will be 3,788 for Joyce for tax year 2025-26. You write this one, you get your entire 11 marks. And again, guys, let me tell you, even these 500 over here and this one, though they will not affect your calculations, you should mention those because you will lose half a mark for both of them. Okay? Major mistakes that the students tend to do is not writing these and taking dividend different and not taking the dividend income rate appropriately. Very important to do those. And again, when it comes to personal pension contributions, when it clearly mentions gross amount of 5,000, you need not have to gross it up again. You can directly take the full amount and add it to your rate bands. Yes, no, maybe. Any doubts until here? Is the concept clear, guys? Is there anything that you didn't understand? I can repeat that again. Can I get a thumbs up if you have understood everything so far? Is everyone clear with the concept? Yes, no, maybe. Okay. Moving on from to the next question, next part of the question, because this is only for 11 marks, we have something else because the total is for 15 marks. So next, let's move on to that, which will be calculate the amount of employers NIC and class 1A NIC that will have been paid by both employers in relation to Joyce's earnings for the tax year 25-26. So here they are asking us about employers class 1A and class 1 and class 1A NICs. So because you're talking about employers, we should calculate for ARCO separately and for Cairo separately. Okay? ARCO's class 1 NIC contributions. Will ARCO have any class 1A in relation to Joyce? Anyone? When is class 1 applicable and when is class 1A applicable?
Class 1A is applicable for non-cash benefits.
That is your taxable benefits, yes. And class 1 is applicable on the earnings, correct?
Yes.
So because ARCO is not providing him with any non-cash benefits or taxable benefits, it will only the salary and bonus, we should take only class 1 NICs. So how much are the total earnings of ARCO, total earnings of Joyce? Is equal to 22,500. You can directly take the answer from the prior value. 22,500. Yes, no, maybe. So class 1 NICs will be what? How do we calculate class 1 NICs? We can directly take a look at tax. Guys, let me tell you something. Probably other topics you might have to remember the application of rules, but NICs, if you take a look at the tax table, you will be able to solve everything. You can clearly see that class 1 NICs up to 5,000 per year is nil. And if it is more than that, you have 15% of contributions to be made. But here, is Joyce actually working with ARCO for the entire year?
No, sir.
So for that reason, the zero rate threshold will also be reduced. It will be reduced to threshold for 0% NIC for 3 months will now be at is equal to 5,000 into 3 by 12. So only for 1250 pounds, there will be nothing. Over that, it will be 22,500. So class 1 NIC contributions will now be at 0 to 1250 will be at 0%. At 0, I can simply write it here at 0%. And then remaining amount will be at how much percent? Remaining earnings will be at how much percent? 15%? Yes, no, maybe? Is equal to 22,500 minus 1250 into 15% will be 31,875. So total class 1 NIC will be is equal to sum of these both 3187 and total class 1A will be 0. Yes, no, maybe. This is for ARCO. Any doubts until here?
So please repeat one more time.
Okay. So class 1 NICs, we know the threshold clearly says that if the employees earnings are between 1 to 5,000, then there will be it will be a nil rate band, correct? But anything over 5,000, it will be taxed. It will be contributions will be at 15%. It says 5,000 per year. But is Joyce working with ARCO for the entire year? Is he working with?
Uh,
No. So for that reason, the threshold will also be prorated for 3 months, which will be giving us 1250. So because of that, up to 1250, it will be at 0. But the remaining earnings should be taxed at 15%, as we can see here.
Okay, sir.
At 15%, because we are doing the employers and not the employees. So it will be 15% and thus giving us 3187. But is he getting any non-taxable benefits from ARCO Limited? Non-cash benefits?
No.
No. So because of that, the class 1A will be at 0. Clear?
Yes, sir.
So this is about ARCO, but he's asking about both the employers. So we've calculated for ARCO. Next we'll do for Kairos NIC contributions in relation to Joyce. So what will we have here? Employee earnings of Joyce. Earnings of Joyce. How much are the earnings of Joyce? Salaries 49,000. Yes, no, maybe. Which is 73,500 into 8 by 12. Yes.
Yes, sir.
So here I will write as cash earnings of Joyce are 49,000, or I can simply recalculate here into 8 by 12 will be 49,000. So threshold for 0% contributions should be again prorated. It will be 5,000 into 8 by 12. Yes, because Joyce is working with Cairo only for 8 months in the current tax year. Yes, no, maybe.
Yes, sir.
So this is to be 3333. So now what will happen? Class 1 NICs will be 0 to 3133 at 0%. 0%, it will be 0. Remaining earnings at how much percentage?
15.
15%. So it will be is equal to 49,000 minus 333 into 15% will give us 6850 as our answer. So this is your class 1 NICs. Yes? Now, do we get class 1A NICs as well?
Yes, sir.
Class 1A NICs, what do we take it on? First, we take accommodation benefit. How much is our accommodation benefit? 8,400. Yes, no, maybe. Yes, no, maybe, guys.
Yes, sir.
Yes, sir.
You can simply write from previous workbook. You need not have to calculate the entire thing again. You can simply write previous workbook. Okay. Accommodation is done. Next, car benefit is also a non-cash benefit provided. Yes. So car benefit is 3931. Yes, no, maybe.
Yes, sir.
So next after that, we have fuel benefit being provided. How much is the fuel benefit? 4136. 4136. So these are the total benefits provided. Is there anything else that is provided other than these?
No.
So total benefit is equal to sum will be 16,467. Now, how much is your class 1A liability? How do we calculate it?
Directly we'll apply 15%.
Absolutely right. Class 1A, there's no zero rate and all of that. So everything will be at 15%. So it will be is equal to this into 15% will give us 2470. So this is your total NIC liability. Now, total NIC liability paid by Cairo Limited would now be equal to 2470 plus 6850 will be 9320, while total NIC liability paid by Arco Limited would now be at is equal to simply this amount that has been included for Arco will be 3187.5. This is how you should be calculating to get your 4 marks. Clear? Though there are no class 1 NICs for Cairo Limited, you should for Arco Limited, you should still mention that. Okay? Any doubts on any of this so far? Have you understood how the presentation should be and how the questions are to be solved? Yes, no, maybe?
Yes, sir.
Any doubts on any of these concepts? Again, guys, my contact details are here and also in the chat window. If you guys have any doubts at any point of time, feel free to reach out to me. Okay. And if you guys are actually having any doubts in the concepts and if you feel that you need quick recap videos to help you in actually understanding all the concepts, you can actually enroll with us for the revision course or revision batch at BeingACCA, wherein we have 6 unit-wise tests, 2 full mocks will be evaluated, and we have 30 to 40-minute quick revision videos that actually help in understanding all the concepts and all the chapters. And post that, we will also be having live sessions for practice and doubt support will be provided to you until the last day of your examination. So any person who actually wants to understand the concepts and only wants a quick revision of all the concepts that are there, you can enroll to our revision course, wherein you'll be able to enroll for it at only $50. Okay. So with that, we come to an end of our session, guys. I would like to wish all of you all the very best for your examination that's coming up. If you have any queries, do not hesitate to reach out to me. I will ensure all your doubts are resolved and ensure you guys are passing your exam with flying colors. Okay. Bye, everyone. All the very best. Please take the contact details if necessary. And if you have any doubts at any point of time, always feel free to reach out. Okay. Bye, everyone. Have a good day.
Thank you, sir.
Bye bye.
Bye, sir.